Hey guys, it's Dan, the retired broker. So today I want to go over the 5 asset classes with you. There has been a lot of confusion from what I've seen on what is an asset and what isn't. Let me just clarify everything with you guys. Very simple and to the point. So let's start. Asset class number 1 is cash, Chinese RMB, Korean won, Sing dollar, and the American dollar. Also, look at this really quick, off topic. These are basically old 1-cent bills from China. They don't make these anymore, but they're really little and fun to collect. So anyway, cash. Obviously, for all debts, public and private. That's what you use to buy goods and services. However, the Fed target inflation rate is 2% a year. So every year, you're losing 2% of value from your currency, from your cash. And that's pretty much common for all central banks. Right now, we have a little bit more than 2% inflation, but you're losing value in your cash every single day. So I always recommend keeping a nice cash cushion, a cash reserve. But other than that, you have to start buying assets that outpace inflation. So the second asset is stocks. Pretty simple. You're buying equity. Stocks and equity are basically the same thing. You're buying equity in a company. You have ownership in a company. And you expect the stocks to raise in value and outpace inflation. And or give you nice quarterly or monthly dividends. Generally, they're quarterly dividends. So when you buy a piece of the company, you basically don't have any say in the way the company's run until you own 5-10% of the company. But basically, buying stock is ownership in a company. Very simple. Then we have bonds. Bonds are you're loaning a company or a government money. And in turn, in X amount of months or years, they give you back your principal plus quarterly or monthly or X amount of months interest. Sometimes you have a zero coupon bond. So you buy it at a discount and it matures at par. So when they give you back your principal, then they give you the interest. But bonds are just loaning a company or a government money. Right now, bonds aren't doing so hot. I'm not an investor in bonds, but that is one of our asset classes. The next asset class is real estate. Real estate, everyone's talking about real estate now. I own 15 rental units in America. I love real estate. However, I think there's a lot of myths and lies about it. Your primary residence, it may have been going up lately. It may have been going up in value. When you're talking about your net worth, you don't include your primary residence. Sorry, guys. Because every month you have bills on that. You're putting money out. You're fixing it up. You're paying the heating bill, the electric bill, XYZ. But real estate, if bought properly, it can cash flow and increase in value and outpace inflation. Traditionally, real estate has been a great asset to keep up with and outpace inflation. Now, the last one is commodities or precious metals, such as gold. This is from China Gold. These are Chinese pandas. I'm not a big collector of gold. I don't own a lot. I own that just because it's fun and pretty to look at and a couple other coins. But it can't pay you monthly dividends. It is a good hedge against inflation, though. If you're really worried about inflation, that is a good asset to have. So those are the 5 asset categories. There's subcategories in there too, different types of commodities, different types of housing, So many subcategories it would take hours to go over. But generally, outside of cash, when you buy these assets, they should be keeping up with or outpacing inflation. That is one of the main reasons to invest. You have to grow what you have. If you keep it sitting in dollars, it's not going to grow. Inflation is going to eat it away. Now, there are alternative asset classes, such as Bitcoin, cryptocurrency. That's been, well, definitely outpacing inflation too. Rare paintings, collectible cards, collectible cars as well. A car can be an asset if it is in high demand and increasing in value. Your Honda, you don't count that in your net worth. That's a depreciating asset. A Michael Jordan rookie, yeah, that's a valuable alternative asset to have. So the 5 main assets: cash, stocks, bonds, real estate, commodities, alternative asset classes, rare collectibles, fine art, Bitcoin, basketball cards, anything where there's a desirable market and you can easily sell it. I hope that clears up what's an asset and what's not, especially when calculating your net worth. Now you know what to include in there, and maybe you're not as rich as you thought. Sorry to burst your bubble, guys, but I hope you enjoyed the video. Let me know your thoughts. Thanks.